Welcome. Okay, lots of craziness this week. So I did all the levels for this week, the expected levels based off of the implied volatility of the option in the money and out the money, all the way to Friday the 31st. So you got upper weekly expected move 25,942, which is rather, it's a good range. In terms of risk to reward ratio, I would say the bottom level has a better reward than the top level because we are at all-time high. There's nothing above that shows any liquidity, any target, any um, there's nothing. It's nothingness. So at this point, we've already swept and turned a resistance into a support. Now, my thinking is because we are at all-time high, that support is going to get tested again to see if it's solid. So I would probably expect some type of downside to come back up or a wick. We do have news on Tuesday, Wednesday, Thursday, and Friday. We have the biggest week of earnings of the month. So that alone is going to have some movement. If the expected move is roughly $10 on the Qs. So you got between 606.70 and 627.50. There's a lot of open interest for Friday. There's about 842,000 contract open. So there's going to be some movement. The movements for Monday is about a $4 expected move, 0.65%, which we already busted through the option one from the Qs. What I do is I take the Qs and then I convert it into NQ. Now we haven't really touched it. We've basically just opened above. We gapped above. There's very little liquidity down here. So if we do gap down, it'll likely just start melting. It's not really going to pull, or there's nothing to push the price back up or any resistance of any kind. This is the range from last week. This is the volume profile from last week. All of the liquidity is over here, right? And that correlates with money flow profile, which has, you know, 8 and 5.6 billion. So there's a very high probability that we're going to go over here. Now we did form a higher high off the opening 4-hour candles. So ultimately, even when the bears were in control from the sell, they still ended up rallying it. What I want to see is in about 3 hours, it's going to be London Open. I want to see if it forms a high and then retest somewhere in this line. Now, anything that's going to close below these bodies is likely going to go and retest at least 677, if not lower. That gap is going to have to get filled for FOMC, which is this Wednesday, I believe, at 2 p.m. So gamma's pretty far below. The fact that we're at all-time high, not only that, the volume divergence, right? So the volume is lowering, but the price keeps going up, which in this case, that just means, so yeah, volume falls. Yeah, so it's bearish divergence. You have weak buying pressure, uptrend, losing strength, possible reversal. Now, would it really reverse upon the fact that they will cut the rates on Wednesday? I mean, if they pause, yes, I think the market is pricing in a cut. and then from all the growth, it kept going. So if the market is priced in on a cut and they end up pausing because they don't have any data, right? They're not forced to cut. They could pause and then cut twice in December or November, or cut in November and then cut in December. Who knows? They could 50 basis point in December or at the end of November and then just call it a year with three of those cuts, right? They could pause because they don't have data. It's a possibility. It's unlikely because obviously everybody thinks they're going to cut, but I think that the Feds ultimately rely on heavily on data, and that data needs to be in their favor. Otherwise, they're not forced to cut. It doesn't matter. So that's something to consider to be protected because obviously during that time the margin requirement for your contract will up to overnight. So that means the market is going to have an ungodly amounts of liquidity because the positions are going to cost more. So obviously there's a lot of liquidity down there. Everybody that missed the squeeze basically has, they're all lined up over here, and then even they're lined up over here. I would say in this range here, what I could do honestly is put one of those block here, and that would be my support. That support hold, I mean, it could fetch somewhere over here on Monday, and then trigger all of this liquidity to go back up. As far as right now, I don't think we're going to keep going up. I think there's going to be some type of downside to go and fetch a wick somewhere in this area. If we keep going up, I mean, I don't really have any target, and I'd rather play the upside on a long-term investment than sending massive futures play because it's all-time high. I've never really liked all-time high for that matters because there's no target. There's nothing. You don't have you you don't have anything to base yourself on, and it's very iffy. There's no, I mean, even then, if you put it over here, it doesn't make any sense. On this one, that would be 5, yeah, and then this one would be, yeah, it perfectly aligned with the liquidity over here. So if we go back to 502, watch the pull back, and then it should reverse. Otherwise, if it goes below and then break below or hover in this range and then start trickling down, and you can see the volume is going back up on the downtrend, that would be a trap, and it's gonna trap trap all the liquidity that's over here and then send it higher. But for now, it's a waiting game. You have to keep in mind that they are just they're just waiting. And the fact that 509 is right over here also, that means it could easily come back down. I mean, that's a 250, almost 300 points. We opened on a high, which is most times that I've seen the daily open on Sunday on a high. There's a retracement. It's not just going to keep going. So I'm pretty sure tomorrow we're going to have a bunch of retail starting to sell and continue selling into the FOMC meeting so that they have a better price once they release all their data and then their rate cut decision. So keep in mind, I wouldn't say we're gonna go here, but who knows? I mean, it's pretty significant move. The lower weekly is below it, which is at the very end of all this liquidity. There's just nothing here, so I'm pretty sure this right here is just gonna be a complete melt. The sweep itself is gonna be significant, so that's something to consider. Lots of earnings as well. So if one of those earnings is a fail, or it shows stagnation or failure of growth, it'll likely melt through. So these were what I saw break a pattern nicely all-time high. I mean, granted, 323 is kind of pushing it, but it is out. It is broken out of the bull pennant. So maybe a retest below here somewhere, 242, and then it would launch. That would be great. Or the fact that it continues. You see these candles, but the volume itself is diverging. So again, it could be a reversal that leads to a retest at the top, and then it goes, right? Or it's a false break, and then it comes back into the pattern to fetch 12.7 that's sitting over here at support. Support's right here. So for now, this is a very good opportunity if you put limits at 243 or 242.8. Anything above, you can long at above 254 as soon as you can see it holds. It's already broken out of the pattern. If it does not come back, it's going to avoid this. It's going to avoid the breaker structure and just go, it's going to come back later. That's a good area to save for later. The volume divergence in itself tells me that there's either one more shot up or it's a trap and then it's going to fall right back down. So that's to consider. Google. Google's been on a nice little wedge for a while. Now, I doubt that this is going to fall right back down to 184. I mean, who knows? They do have earnings this week, right on Wednesday. So after, I think it's after market, isn't it? Yeah. So right after the Fed speech. So the breaker structure in an uptrend, it like you can't have a breaker structure in an uptrend. If you're in an uptrend, you're in an uptrend. It like the breaker structure is either going to be through a resistance that's going to be retested and turned into a support, or like here you had a very strong breaker structure with that candle, right? Close high above, and then obviously it continued rallying. Here, the breaker structure was bought, like sold right off. You break a structure to the upside from a candle that's already in the momentum is likely to be a trap. And that's exactly what happened here. Break a structure and then it just trapped people at the top, which they probably exited over here. So you got to be very careful on Google. Though it is a pattern, the rectangle has broken out. If you had the continuation of the rectangle, it has broken out and target is high above for 280. Now, again, if the Feds are cutting and the market really likes it, it already has fetched plenty of liquidity, high or low, and then it went. So there's likely to have a bunch of room left for these trades. If anything, long above 262, which is a little higher. So if it goes back up, retest comes down, it's a high. Nvidia, Nvidia is a nice little range bound. I mean, it's been in the range of almost $30 for months, right? But the thing I saw is the double bottom at the 200. So that means there's a lot of liquidity that entered here. A lot of buyers entered here. The fact that the volume is consistent. Now it is falling volume as it goes, right? So volume fall and price rise, though we are in the downtrend because higher high, lower high, until we form another higher high. That's still, this is valid, but at the same time, there could very likely be a retest somewhere down there to form another higher low, and then it would go. it's still a bearish divergence because the volume is falling and then the price is rising in that fall. Now it's not significant, but at the same time, it's not busting through the highs of the break. So to me, it's a falling volume. If I see volume that goes and close above here, then yes, that would dictate the fact that there is a potential to continue. But at the same time, the MSB over here was rather weak. And we know what happened. It was a weak MSB, and then it fetched liquidity at the support, and then it went opened up on a gap. So the same thing could happen here because it is a double bottom. A lot of liquidity was triggered, so there is a chance that it's going to form a lower high at 194. So keep that in mind. This is also a very good opportunity. 20 is also above 50 in that case, and they're parallel. So it's compounding interest because the moving average are very close to each other. So all this is compounding interest. There's an explosive move coming. Long above 188, so anything above 188, you are free to long that. And there's no liquidity above, like it's blank. There's resistance is over here, which is exactly where the target is, right? If you put a block from here to here, that would be directly in it. Very good potential here for the whole rest of the week, especially with the Fed, right? I mean, these earnings are at the end of the month, I believe. Actually, no, they're next month. They're at the very end of the whole bunch. So that's just going to feed off of the tech sector. Apple. Apple's been doing pretty well after earnings, after their last quarter, and especially after they fetch a lower low and then higher low, and they kept forming these. They kept going higher, but also forming support as soon as it breaks resistance. You gotta like it breaks resistance, kind of compounds, comes back down, higher low, back to resistance. Now on the retest, it formed support. Same thing here. Lower low, liquidity sweep back into the ones that missed the trend, and then higher low, and then it went to form another higher high. Now that's a higher low. Very nice fetch of liquidity that was over here. I mean, clearly there's not very much left. Now, could I see something 251? That's a possibility because this is soft support at the moment. Though I could possibly see 257. Definitely a retest of 20, just because it's trying, and then if 20 flattens, then it's gonna try and retest it, and it maybe go back here, higher low, and then it goes right before earnings. They still failed to create a higher high, so until it goes into a higher high, as far as right now, it could fake and then come back down to go test. It's a good opportunity. That's also waiting to form pattern, depending on where um, depending on where the pattern ends. It's a good opportunity here, especially on earnings. There's going to be, I mean, the rally's already been happening, but it's the whole month, right? It needed a low, low, higher low for growing. This hammer here is telling me that there's plenty of buyers that came in. What you want to see is the volume subsiding, which is not like there's not very much volume, but on the spike here, a lot of buyers came in, and then the rest of it came right here through these trends. So long above 265, so anything above the highs you're feel free to go long. Just for now, keep an eye on it. You got bullish engulfing candle. I mean, the trend it broke out of this consolidation, so it's looking good for a long. That's what I'm saying. Tesla's a fucking range cell. It's all range bound for almost 2 months, right? And then now, not only that, it failed. Like on the head and shoulder, earnings came in, or earnings rally, and then when the earnings came in, it went down, but it stopped at a higher low. So that would likely go back here to retest 393 if it breaks 413. So you could either short it to 413 or just wait for 413 to break and then short it. Though the 200 is an incline, so if it starts forming a higher low and doesn't touch the 413 area or that support over here, maybe over here 422 somewhere thereabout, it'll rocket back up. And I mean that would be 489 for target because ultimately it's already swept here or drew. That would be a draw if 433 holds as a support. So it says long above 450, which is, yeah, rectangle, and then short below 410, 413, at least here. And you really want to, if you're long, like you have plenty of upside even to the resistance over here. That's where I would start shaving position and then letting a letting a runner run if you need to. It's definitely a possibility here. Though you would really want 200 to come flat so that you have a potential for a lower low and some liquidity sweep. And also, not to mention, you could do a strangle. You could send a short for 381 and send a long for 490 and to end the year. It'll cost you less or cost you pretty much almost the same as if you were to buy one-sided. And if it does go down, sell, and then your call has plenty of time for Tesla not to fuck you up, and then you capitulate on both sides. Palantir, massive range bound, beautiful range. I mean, last time it did this much range, it launched it into a trend for an entire month. It's almost at the highs of its range, but the thing is they keep buying it at the same level, at the same price, 170, right? I highly doubt 170 is going to break because they keep buying it at the exact same level. They keep selling it before it reaches a high. So the next test of this, that's going to be make or break. If support breaks, it's going to 162. So long above 187, once it breaks here, and then if it breaks below, start shorting. Falling wedges, like both patterns, are neutral. The last time it reached those highs, it failed. Now, even if it fails, it would be a higher low, and there's plenty of liquidity to stop it. So if it fails, I would aim for 200T. This is a great short opportunity in my view. as long as that soft support does, well, at this point it's hard support, but as long as this support doesn't bring in more buyers, that would be a straight short. Just because this is like it's almost declining at this point. Once it's declining, like it's game over, you know it's a short. It's been consolidating and compounding, even from the trauma standpoint. Once it either starts crossing, that's your trend. So I would be advised that there's a possibility for a nice short down here. Now everybody's talking about SoFi, SoFi here, SoFi there. SoFi has been crazy rampage all month, all year too. So consolidation, and then it did just go and sweep the highs. So is it a sweep or a draw? If it's a draw, then it is going on earnings, is going 34, 36 bucks. Now, because, see, SoFi is tricky because it's been ramping the whole year. Last time on earnings, it beat by 30%, which is huge. And they had some left. So ultimately, all this consolidation could also explode. And I do believe SoFi has so much fucking buyers and opportunity with their crypto platform that it's gonna likely go to 36 bucks easily in a earnings rocket. Like you can see higher low. You got double bottom and then a higher low, and then it just went right after and consolidated to end the week. Volume itself, it's great. There's a lot of volume here. There's a clear downtrend, or that's a divergence, and then it flipped at the highs. There's still some left here, but because of earnings, it could bust through and then go straight to 36 to come back and retest it. So there's good long over here. That is all I have for this week. That's what I'm watching just because it's a they're very good potential. I mean, this Oracle also is, I think, oh, it's far back. Yeah. Oracle would benefit from all this sector mayhem. I mean, fucking price targets 389. That's just from earnings. So it's likely to go back to 318, 320. That's another good spot. Probably say at least 311. If it can manage to close over here, close above, and consolidate, it's going to go at least 316, 310. It's in either area. Pretty good amount of movement over here. Now keep in mind, Meta, yeah, Meta's on the double, another one on a double bottom. Plenty of liquidity at 775, and these are already range that are from the past. Like it's already set, and it is above 200. So my guess is this is valid. From the double bottom, it's at the resistance. If it gets out of here and retests 742, 7, anything above 745, 743, that's going to come out of there and you're going to catch something to go all the way to 775. So I would keep that in mind. Those are pretty good opportunity over here. I'm actually going to add that too. And you have trap liquidity over here, 795, which hasn't been swept. I mean, it attempted it, but failed. And there's plenty of liquidity above, so that's one thing to consider. Other than that, gold. Yeah, gold. Gold to me is a clear short. It's a clear long-term short because I don't trust the fact that they would rally it from the bottom. I mean, last time in 2000 and whenever, it did the exact same thing. It attempted to go higher, but failed. And basically, I don't think it's going to go any higher than 41. There's still anything higher here, that's a sentiment shift. So 42.62 would be a buy from there. Anything below is a short. Target 39.94 and 38.52. I think they're just going to melt it down to go and fetch a bunch of buyers so that it comes right back up. But for now, this flag here is bearish to me in the long term, like by end of year or so. Now the rate cut probably will give us another top, if not a breakout, false break, and then come back down. But I'm just following the macro on gold. I think if I'm following the macro and everybody else would do the same thing and end up selling through this so that they can have a better price if gold is to go back to the backing of the dollar in the future, or even a better asset for a market crash. Let's see this guy. Now, obviously, even if you extend this, it still hasn't. It broke the highs to form a nice little trend. Which ended up retesting the top. So basically, this came out to go and retest the top of it. Now, anything above these range is going to be bullish, and it's likely to come back to 118. But it really has to come back to 118, and then the 20 continue its ascending. So 118 and 122 would probably be somewhere. And you see, there's no liquidity over here in between those range. So that's probably where on Wednesday we have a nice little rally through, and then a lot of shorts are going to be taken over here. If not, then I mean we're going back to 100, which would be catastrophic after they tagged 115.943. So we're right there. We're either tag this and shoot up, go here, and then come right back down to consolidate, or we go back down, retest the MSB to see if it's truly solid, and then it goes. As far as right now, volume is diverging, so it could be a trap. I would still wait, probably place limits over here. Technically, the top itself is completely unfazed so far, so it's been just downtrend. We really need to break this level, form a support here, and then they'll have more chance for 20 to retrace and go and cross 50. Because for now it's flat. Retest here, trap buyers, and then come back down. So yeah, I guess that is it. Option flow for Qs on Friday. The last order on Friday was right at 4:05. It was a 6:17:10 call for strike 6:15. Oh, actually, no, it's expired. Never mind. I'm reading. Let's see if we have anything further out. 31st. Yeah, I don't have anything on that for the 31st. Let's see. Option. Yeah, lots of calls for like actual calls, not ISOI. Though I could just talk about ISOI. Just turn everything else off. Yeah, you got SoFi. They're all calls. This is expiration 31st, so not really any popular names. Call for 280 ISOI. Now it's very little premium, but it's still 280 and then 250 for the price. So it was sent at 2:48 p.m. on Friday. So that would be a trigger at 280, somewhere around 280. And you got Google. Two, four, yeah, they're puts for 220. So Google might actually reverse at 220 or thereabout. Talk about a low. I mean, they're small, but still, it's potential. Nothing for Nvidia. Apple, we got 262 puts. That would trigger as a long reversal. And granted, it's a pretty significant amount too. Quarter of a mil. Not bad. That should trigger some liquidity. Yeah, does Tesla have anything? Meta with the double bottom, that's one that I'm gonna probably play. Yeah, you got nothing on Meta. Anything on PLTR? Then you got SoFi, yeah, 37.50. Right in the $36 range that I talked about. Yep, I think that's where we're going. 32, 35 right after earnings. Yeah, SoFi is I think is probably SoFi and Meta, and then AMD with the double bottom is probably the better of all the opportunity this week. I'm gonna try and send some send some plays. But yeah, 37.50 would be the TP for that play. That's buy to open. So that would be all for me this week. I will be there shortly in 6 or 7 hours just to give some insights and then try to get a good intraday trade, even though it's Monday before the biggest earning weeks of the month and quarter, and then as well as the Fed meeting decision. So you gotta be on your toes this week because it's gonna be either really volatile or we're going to 67, 68, 6900 easily. I mean, we're already at 68 almost. So it's a couple hundred points and we're at 7,000. So yeah.